Hello, friends. Welcome once again in the very important session of GyaanStation.
So this session is going to be more of a, as we said, for corporates especially. So insurance generally, all of us understand a bit here and there. We all know about it. It's not something, especially post-COVID, things have really changed for insurance. Everyone at least now is aware of what is health insurance. People are aware of the car insurance. So on the retail side, I think the country has seen a good change of awareness over last decade, I would say. But the corporate insurance is still something which is not so much common, or even if corporates buy insurances, they are heavily, I would say, underinsured, or in or some way that the insurance that they're taking is not adequate. And that's why I thought it will be a good platform to take you through, take this group, which is actually a professional group which deals with the corporates day in day out, and it should be a very interesting session for people like you. So before we take a dip into the subject, let's revisit some of the basic things that that insurance talks about. In insurance, you talk about sum insured, you talk about exclusions, you talk about premium, deductible, coverage. Um, so very standard stuff, but they may look to be very simple, but actually the entire problem lies in these only. So insurance, if your sum insured is not adequate, not chosen properly, you have a problem. If you don't look at your exclusions, you are in a problem. If your premium is high, you are in a problem. Deductibles, again, is a problem. So here we are to solve those problems for the corporates, make it easier, make it more approachable. And that's where, we're talking about these basic things. So sum insured, if you look at, is the amount till which you cover yourself, and we see that at a lot of times the sum insured is not very adequately taken. There is something called under insurance word in insurance, where people, if you take it, if the sum insured is taken less than actual sum insured, the value at risk, the claim actually doesn't pay for the entire amount in case the claim happens. So which means that the sum insured has to be very adequately taken. I'll come to those parts as we proceed in this session. Exclusions are something that have to be also understood very carefully. If you look at the policies that come to you, and most of us, we hardly read through the policies. And therefore, what is covered, what is not covered is something that we see only when the claim arises. And when a claim comes, and if you're not covered, the entire premium goes for a waste. Deductible is something that is a compulsory portion that is deducted from each and every claim. And typically for policies like fire and others, they vary depending on the sum insured. Then what is covered under the policy? So it is important to understand different types of risks. We have different coverages, and those things we'll be talking about as we proceed. People don't understand what is a warranty, and this happens to be one of the most dangerous things when you talk about an insurance, because warranties come into play. These are some of the things which are enforced by the insurance company on our customers. So for example, you have a storage in a basement, and that no storage in the basement. So the moment there's a warranty like this and it goes ignored, the claim becomes things that we are talking about in some of the basic concept. Then comes the nature of the risk. What kind of risk your business has? A plastic risk versus a textile risk versus an engineering workshop. So various different types of risk have a different type of understanding, and therefore they also become a part of the basic concept that we are talking about here. what we also miss at times, insurance, people don't realize that ultimate disclosure becomes a very I will have to declare my health condition. Similarly, what is relevant for your business is something that you need to declare. And a lot of times we tend to not declare those things. For example, I am likely to get a case or a litigation may be coming to me, which I can foresee as a business owner. But at the time of buying insurance, I somehow miss that. I don't declare that. So in the event of a policy getting triggered and if there's a claim, that becomes a relevant material issue which has not been disclosed. So insurance company says that you don't declare anything. I am fine issuing a policy to you because I'll not be checking anything. But at the time of claim, if you have I have taken things on utmost good faith. So at the time of claim, if something has not been disclosed to me, exactly what is material to the risk, then the claim becomes non-payable. Similarly, on the insurance, there is a principle of indemnity which happens, which means that whatever loss you incurred because of an insurance, at the end of the period, you actually can get only to the extent of that loss that you have done. For example, you cannot make more claim than the loss itself. So you cannot be at the situation of profit. And then it also talks about treating the risk like your own risk. The very fact that you've taken insurance doesn't mean that you can take risk management lightly or the maintenance can be laxed. So these are the things that the businesses also need to be very careful at the time of taking insurance. So it is important to understand what are the kind of gaps that we normally find with the policies. And we as insurance broker come across many cases, very, very basic flaws, but at end of the day, the claim gets jeopardized because everyone understands that the claim होता है, claim करते हैं, लेकिन मिलता नहीं. See, the insurance document, end of the day, the end product of the insurance document is a claim. And if a customer doesn't get a claim, the whole thing goes useless. Here, as a professional team who is dealing day in, day out with the customers, it's important to put your hands on some of those points where the mistakes can happen. Mr. Reddy has raised his hand, and uh, I would be happy to answer his question. But Deepti ji, should we finish and then look at the question answers, or should we take it midway? How do you normally prefer?
So please continue with the program, and if we want to unmute, I don't think. So please continue with the flow of your presentation.
Fine.
We'll take up the questions, and in
Yeah.
chat we'll keep it interactive. Yeah.
Yeah, sure.
If whatever will be the questions will be take on the after presentation.
Right. So one of the things which is very typical is that when you take an insurance, suppose your total asset is say 100 crore or say 1 crore by 100. Say simple 1 crore is your asset, and you foresee that your risk at any point will not exceed 50 lakhs. So if whatever happens, I will not face a claim more than 50 lakhs. And say thinking that you take an insurance of 50 lakhs and you save 50% of your premium. So this believes that, okay, your total asset is 1 crore. You have transferred the risk of only 50% with the insurance company, balance 50% risk you have retained with you. Therefore, in the event of a claim, suppose you estimated maximum loss to be 50 lakhs and actual loss, if it happens, is say 20 lakhs. 20 lakhs fire happens, 20 lakhs worth of stock is damaged. So in the event of a claim, the insured will not get more than 10 lakhs. He will simply get 10 lakhs rupees of claim, and balance 10 lakhs of claim will not be payable. So here the under insurance applies, and therefore the claim gets partly paid. Similarly, there are issues that you take an insurance and it's on not taken on the reinstatement value. So the sum insured, while has been declared on sometimes the book value is declared and not the reinstatement value. Lot of times the sum insured declaration is done by somebody not so senior in the company, and he would simply give the sum insured basis his books of accounts. Here also the same under insurance comes into play, and the problem is that the claim is not as per the satisfaction. So as professionals who are guiding businesses, it's very important to make sure that the sum insureds are very, very adequately checked very thoroughly, and reinstatement value. So reinstatement, let me clarify what it is. Suppose you have your assets keep on increasing in price, because if you replace today, while on one side you will feel that okay, my assets are getting depreciated, but actually speaking, if you want to replace the same asset with an alternate in the event of a loss, then you will have to incur higher cost every year because of the inflation. So those adjustments have to be always done in the sum insured, and therefore it is very important to review the sum insured every 2 to 3 years for every company. Not just in corporates, I would say all of us, when we take health insurance, I have seen many cases, even in health insurance, you have taken a policy for 10 years back worth 5 lakhs. Will that be relevant today with the rising medical costs? It's not. The same applies for sum insured for your factories, the assets, your stocks, everything. Among the risks that we talk about recently, of late, as per various reports, one of the biggest risks which people face is the cyber insurance, because of a lot of cyber activities, a lot of internet and things like that. So cyber is one of the big risks where people don't take it. But at the same time, business interruption is also one of the big risks. So when a fire occurs in any of the plants and machinery or a factory, what happens that your business also gets interrupted. The profit stops, the entire revenue stops, and maybe 3 months, 6 months, 1 year, depending on the complexity of the business, it takes the time for the factory to be up and running again. So for this period, there is a policy of business interruption, which should be taken by your clients, your customer, the businesses that you take care of. And it's a very simple policy. A simple fire policy can be extended by a fire loss of profit policy. And therefore, the coverage becomes very, very comprehensive if this policy is taken. Another thing which people don't look at is the kind of management risk, management liability, and the director and officer's liability. See, today in this world, legal things are very, very easy to approach. The courts are easy to approach with the consumer forums and various forums coming in place. And for various things, directors can be charged. Directors can be challenged in the court of law for any sort of wrongdoing or anything which has impacted the litigant. Now, there can be scenarios when the company comes and defends the directors, but there can also be scenarios when the companies simply disown the directors. And the legal expenses today are not light, they are quite heavy in case, depending on the kind of case. So DNO policy takes care of all the legal expenditures which are incurred by the people who are directors and the key decision makers in the company. In fact, a lot of independent directors, when they go to join a company these days, they say that, do you have a DNO policy? Do you have an adequate DNO policy? Because tomorrow, if some litigation comes on me, who is there to defend me? So these are the things that the companies need to think about. This next point I've already covered to some extent, that renewal is without adjusting inflation. So, and new additions at times get missed, and new parts of the factory, new additions, new sum insured, new installations, they also get missed out. One of the very interesting cases that we keep coming across, in fact, we also came across one case where the customer declared a location, he paid the entire premium. And this case happened in Guwahati, where the customer declared recently there were a lot of rains and cyclonic flooding in the Guwahati, and one of the boundary wall collapsed. And when the claim came, it was realized that the customer had not declared this address at the time of taking fire policy. As an insurance broker or as an insurance company, one would not know which all addresses have been covered. So it is a duty of the customer to declare. But customers at times miss it, and once they miss it, the claim becomes straight away denied. It is repudiated by the insurance company because it's a fixed location. Location has to be specified in this policy. So these are also the things which need to be corrected periodically from time to time. A lot of companies keep shifting their godowns, keep shifting their offices, and therefore these policies also become important. Some of the other things which also come across, which companies come across, are things like professional indemnity. So as a fraternity, as a CA fraternity, you doctors, architects, all such professionals are liable for any sort of laxity in the professional duty that you are doing, and in which case there can be legal suits on professionals. So again, a professional indemnity policy comes and defends you people from such claims. Coming to the next part, I discussed about a flood claim recently in Guwahati. Similarly, claims keep coming. In fact, there was a claim in Kolkata recently that we came across. It was a project insurance, and there was in a project you are actually into laying of cables, laying of pipes, PVC pipes. And during the PVC pipes, what happened? There was a fire. Fire happened because of unknown reasons. Surveyor came. He looked at the things, and finally, what came across was that there was a lot of vegetation around that area. And it was concluded that somebody had thrown a cigarette, whereby the vegetation caught fire, and finally it was done. When the policy was seen, policy was carrying a vegetation maintenance warranty, that the insured will have to clear all the weeds and the vegetation in that area periodically at his own, is the responsibility of the insured. Which means that if at all the fire has happened and there was a warranty in this policy, the claim is not payable. Similarly, there was a claim recently which came in a chemical godown, where some chemicals, because of their inherent nature of the chemical, caught fire. So there's something called a spontaneous combustion cover, which has to be taken alongside, and some things which have an inherent vice is there, that they are likely to catch fire on their own, need to be given a spontaneous combustion cover, which was missing in this case, and therefore the claim again got rejected. So these are very, very fine, small things which companies may not be aware, or companies may be missing out, especially when we talk about small and medium companies, because they will not have their own insurance team. They will depend on an old legacy agent they will be dealing with. Agent will be, nothing to say that agents are not technically able, but a lot of times gets skipped. A lot of times what has been going on continues as it is, and therefore we don't look at the kind of hidden things. Actually, the risk we see are like an iceberg. what is seen is simply at the tip of the iceberg we see, but at a lot of times the risks that actually exist are far more than we normally see. And as a professional, as a consultant, as a broker, our job is to highlight those risks to the customers which are unseen. So when we look about risk, we have, while there are 30, 40 policies available in the insurance domain, I have tried to make it simpler and look at 4 categories in which the risk will typically lie. So these 4 categories happen to be: one, property and the assets of the organization. Then the risk is about the people and the workforce. You talk about liabilities and the legal covers that come across, and you talk about transit and other technical or specialty kind of risks. So here we are talking about these 4 one by one, and we will just touch upon these covers so that, see, in this session, the idea is that this group is just made aware, so that when your clients, when the people whom you take care for the businesses, when they come across any sort of such risk, you at least know about a solution which may exist for them. That itself is enough. So we talk about property and assets. So fire policy is quite common. Everyone takes it thinking that fire does not happen, but actually fire does happen. In fact, if we go to Bhiwandi, close by, every year you will hear about 3 to 4 fire cases coming in, fire or flood or something, and it has a big storage. It's a big logistic hub for Mumbai. So fire and property risks, where there's a damage to buildings, stock, and plants. If the size of the business is very big, you can also take instead of a simple fire policy, one can take a industrial all risk policy also, which is a much wider policy, which goes beyond the listed covers. So fire is a named risk policy, named peril policy. So it covers fire, lightning, explosion, implosion, lot of things, aircraft. So fire does not really mean only fire. It's a very wide cover. It also covers malicious damage. It also covers riot, strike. It's quite a wide thing. You can also take a terrorism cover along with fire. It has inbuilt earthquake cover. One can take flood also as a part of fire. So it's quite a wide cover, but even wider cover can exist in terms of industrial all risk policy. So if the earlier the sum insured cap used to be 100 crore for a single location. Now even for 50 crore asset, one can take an industrial all risk policy. Business interruption is again an extension of the same risk which we have talked about earlier. It covers loss of profit due to downtime. Then there are risks when you are undergoing some sort of a construction. It's called project phase, and after the construction is over, it goes into operational risk. It becomes operational risk, and then the fire policy comes. So before fire policy commencing, when things are under construction, there is a specialized cover called contractor all risk. When it's predominantly civil work, you can take it through a contractor all risk. However, if it is more of a factory and machinery kind of installation, instead of contractor all risk, there is something called erection all risk. And also you can talk about contractor, plant and machinery and a lot of other things which can be protected. So property would also include motor vehicles, and any sort of property then one can think of can be covered under this section. When it comes to people, most of the businesses run on people, and therefore on people protection, a lot of people are giving group mediclaim policies, group personal accident policies, where you form a group, and in a mediclaim, when you take in a group, any sort of pre-existing diseases get covered from day one. If somebody takes a retail policy, there is a waiting period for any pre-existing disease. If I have hypertension, my hypertension stands covered after 3 years or 4 years, depending on the policy. But in a group Mediclaim, it covers from day one. So any employee is covered for any sort of disease from day one, which makes it very special. Similarly, group personal accident policy, there are a lot of humane angles to it, that when you're having a large employee base and you're giving a accidental cover, especially for people like Swiggy, Zomato, where large workforce is traveling and people are traveling on bikes, the such covers really come very handy for people who are running out in the market day in, day out. A similar policy happens to be workman compensation. Now it is not called workman, it's actually employee compensation, where it's valid for every, even blue collared, white collared, everyone can be covered under workman compensation these days. And this policy takes care of any sort of a death or injury during one's course of work. So this policy becomes applicable right from the time the person starts from the home and ends when person reaches home after completing his work. The best part of a workman compensation policy is it's a no-fault policy. So unlike a group personal accident, there are a lot of exclusions in the policy. Like if somebody is drinking and driving, for example, let's take that example. So if somebody is under the influence of alcohol and meets with an accident, group personal accidents will straight away reject the policy. However, a workman compensation is a very, very soft policy. It states that even if it is under the influence of alcohol or something, the policy gets payable because it's a no-fault liability policy. So you cannot pinpoint the fault on the employee that you have a fault and therefore I will not pay. If there is a death or injury during course of the work, employer, whether he has taken a cover or not taken a cover, is liable to pay that amount, whatever the labor code decides. And here this policy comes as a very super protection for the corporates if they have taken it. It comes very cheap. Similarly, businesses which are working on specific people, because some of the directors or some of the promoters, if they're running the business and the business success depends on those people specifically, and if one believes that in absence or in case of death of any of such promoters, the business will suffer big time in terms of the profitability or the revenues, then this scheme and policy also comes into this picture. We touched upon liability and legal covers to some extent, and director and officers policy is again a very, very important policy. Of late, in last 5 years or maybe actually last 10 years, this policy has seen huge uptake. Now this has become almost like a commodity in the corporate sector. Every company which is mid and large corporate takes it, and SMEs typically don't take it as of now. A lot of SMEs may or may not be taking this. So this we believe is a very important cover, and even if they have it, it should always be checked for the adequacy of the cover. Whether the kind of covers they have taken, is it enough? The legal cost can really be killing. Honestly, I've seen people who have been paying through their nose the kind of legal cost they come across. And this policy is very important, especially also it even goes to the extent that in the case of housing societies, managing committees and all, this director and officer policy is something that is the least thing that the managing committee can give it to themselves. Because in case of any litigation, this policy will come as a protector for them in their individual capacity, not just from the organization's perspective. Anyone, as I said, anyone who is a professional like doctors, doctors, CAs, lawyers, even for that matter, software companies, they are likely to make some mistakes, which are inadvertent mistakes. They don't intend making that mistake, but still they happen because of various errors and omissions. This policy comes and helps, again, in terms of defense cost and also to the extent of compensation, if at all it is awarded by the court against these people. So there are very specialist underwriters who do this activity for us. Like there are companies like Tata, HDFC, and many more companies who do it very, very well. And we have excellent terms with these companies where we can arrange for the such covers. One of the product also happens to be product liability. A lot of people don't understand this, but to in a very simple, if there's a cosmetic company, let's take in a cosmetic, it launches a product, and by using that cosmetic, people develop blisters in their face. Okay. In such case, those people can go and sue the company, and here the product liability comes into picture. Can be for a cosmetic company, to a car company, to a pharma company, to any company which is dealing with consumers where there is a chance of a product not working as intended and leading to any sort of a bodily injury or a property damage to the people who are consuming. Similarly, there are companies who are into specialized chemicals, who have to take a lot of pollution level clearance, environmental clearance they have to take. And if at all something goes against their plan, there can be huge liabilities coming on them. And here, such policies are also come into picture. And then we talk about specialty covers like cyber, marine, trade credit, bankers indemnity, and even others. We'll talk about them. So marine transit is very common. This is something that everyone who's running a business has some sort of transits and marine policy, either by traveling on road, rail, sea, domestic transit, export, import, all those things are covered. So it's again a specialty line, and these risks can be suggested for people who are not taking it adequately. Now there are various covers which can cover people not on single transit but on the entire turnover, so they don't have to worry about declaring their transits every time. A single turnover policy can be availed, and marine comes into picture. We talked about cyber insurance, which is becoming an increasingly important cover to have. So any sort of a fraud which happens to companies, we have seen a lot of cases where an email will come to the accountant from the MD or the CEO that you pay 50 lakhs to so and so party by today end of the day. This poor fellow will simply think that, okay, this is really my MD, and finally the money can be siphoned. So these are the kind of covers cyber insurance will allow. It also talks about any sort of data leakage for consumer companies, for software companies, if at all there's a data leakage, and that data leakage leads to any third-party claims by the companies, by the consumer or the company itself, then the cyber insurance also comes as a protector. There is a cover called trade credit. It's one of the very interesting covers. It is a credit default insurance. Very, very less understood, less known in the market, but comes very handy because a lot of companies simply go bust because one or two buyers at times default on the payments. And this trade credit policy covers any trade default because of a buyer going bankrupt, or there is a protracted default. I mean, says I'll give you money tomorrow, next month, and keeps on doing that. After a certain period, this money can go into the claim itself. You can claim this money from the insurance company, and the insurance company will take the rights of recovery from that buyer on his own. and there are specialist teams who do that. The way this policy operates is that you have to declare all the buyers to the insurance company, and they will do some sort of a credit rating. They will assign certain limits that, okay, for this buyer, I can give you this kind of limit. And till that limit, if you're trading with that partner, that buyer, and then there are covers which are taken specialist covers for the banks. One thing which is not written here is a commercial crime policy. Commercial crime is also one of the very important covers, which covers any sort of a wrongdoing in terms of let's say any dishonest act by an employee or any criminal act by an employee which leads to a direct financial loss to the company can be covered under a crime policy. So this is not only limited to the crime committed by that employee, but if an employee joins hand with a third party and commits the crime and which leads to financial loss, is also covered. And the policy also covers any criminal act by a third party, even without an employee. So it is not limited to employee being in picture, third party, employee, and they both joining together. Any sort of a financial loss to the company can be covered under the crime policy. So these things can keep on going. There are many covers which we have not even spoken about, but this is kind of the gist of the covers available. I tried doing it simpler because of the 4 segments we spoke about, that covers are there. And I think we can at least talk about these covers depending on how we come across. In fact, I'll be very happy to share this presentation to people end of the session with Deepti ma'am, just as a ready reckoner, because we may finish this maybe after this call, after this session. Down the line, people may not even recollect covers we spoke about, and this can.
Sir, little bit technical glitch from in the voice is breaking from your side, sir.
Okay, let me just check.
Yeah. Now it's fine.
Yeah.
And so
Okay.
wonderfully you are covering all the aspects. Please continue with the presentation. Yes.
Thank you. Is my screen visible
No,
still?
sir.
Now?
Still not.
I will have to
share option.
Yeah. Yeah, share.
Please make it full screen.
Yeah.
So very unique kind of.
I think it's visible now.
Yes, sir. Screen
Yeah,
is
it's visible now.
Yeah, full screen. Yeah. So very nicely you are covering
Yeah, so
transit
we have
and very
covered
different kind of insurance. Most of them are not even aware even all these kinds of things and products exist. Yeah.
Yeah, I think that was the idea, to at least
Yes.
let you know. We cannot go into depth for each and every product in such a short time. At least it's important to know, because at end of the day, if you are aware of the kind of risk that you are facing, your clients are facing, you can advise them that, okay, look, there is a cover that can be taken. So how do we come into picture as a specialist here? Because the way you are doctors for your clients in terms of their financial things, we are the doctors for the risk. And you know, the people, and there are a lot of people who are not even worried about the pricing here, because see, here you are actually paying only 1 rupee to cover 100 rupees of your asset. The premium that you pay is 1%, 2% max, or even less than that for property. So the kind of coverage is huge. So people, lot of times, one, think it as an expense, but it is an expense. It has to be seen with the coverage. If I'm taking a car insurance and I'm not taking a zero dep insurance, that actually when the claim comes, 50% is gone for the depreciation itself. So it's very important to make sure that the cover I am taking is adequate. And therefore, number one, who will advise you on the cover? So it again boils down to the experience, that when the customer, why will a customer only go with you, go with us, or any insurance consultant? Beyond the pricing, it talks about the kind of experience, how clear we are. Are we talking to him in very clear terms? Are we making sure the coverages that we are providing is extensive enough? Are we genuine? Are we a giver or a taker, net giver or a net taker? So here, a lot of times go and ask for premium, but what are we giving in return? Relationships don't only work one way, and therefore, because in insurance the claim happens once in a while. So so they look at your genuinity, and therefore the insurance, as you see, this is the a product which comes when you are into some stress, and they need people who are genuine here. And here they also need people who are knowledgeable, who have understanding of the domain, somebody who can really add value to their business, who can look at the gaps, who can help them assess their risks properly, who can also help them in conducting risk inspections at times, who can offer them advisory, at times help on the valuation, the point we discussed. At times your valuations may not be adequate or right. And also someone who is responsible enough, who can be always approachable, phone call away, who can, as a broker, and I'm not talking about only choice. IRDA has ensured that the broker code of conduct is in a place. So every broker in the industry is bound by the code of conduct, and he or the broker has to provide you as a duty end-to-end support on the claim settlement. His job is not limited to selling the policy and giving you the policy and advising it. It has to be the claim. Also making sure, just like CAs and doctors are professionals, and they have a responsibility to deliver a quality service. Same with the insurance broker, that quality of policy delivery, any sort of a deficiency or a miss is not permissible. We are making sure that all those things are there. So these are the things that a client expects from us, and we as Choice Group are committed to offer that. But this is not a promotion thing for Choice Group as such. It's more of a knowledge sharing, and this thing gets applicable to everyone who is into the industry. So kind of services that a broker like us could offer is as I said, risk advisory. So risk advisory is taking a proper download on the risk, what kind of business the client does, understanding their business and risk. As an insurance company, our family keeps on saying, "अरे भाई इतना ज़्यादा negative क्यों सोचते हो? हर चीज में आप negative सोचते हो." Because when you are talking about risks, you got to be slightly negative. You have to think about कि क्या risk है, कहाँ क्या हो सकता है, what can go wrong. And these are the things we as an insurance community are more inclined to think on those, as I said, the what lies below the iceberg, the risks that lie below. Also, how to manage the risk better. So in terms of taking an adequate policy, or better housekeeping, or hiring better consultants, what risk management you can do, what gaps are existing in the policy. So even if you are not a broker or we are not placing the policy, we can always examine the policy and help and understand what the gaps are. And this, I can say, any policy coming to us, whether a retail policy or a corporate policy, there are gaps. There are certain. It's always better to always just like one goes for a health checkup every year. It's always a good idea to engage with a risk consultant, a risk or a broker, show them the policies, ask them for a feedback, ask for a report. It is free of cost. There's nothing that the clients have to pay, and which will come as a very handy thing. There are a lot of solutions which are available in the market. Recently, for example, you would have seen there was an Operation Sindhu recently. So a lot of people would not know that war is not a covered risk under an insurance policy. So if at all there was a war and the war had escalated, nobody would have got any claim, even if there was an insurance. So what do we do? So there are specialty things available. So today, suddenly post Operation Sindhu, the market has become hot. People are asking, see, in a war situation, things progress into 3 stages. First thing, army attacks their military. So military bases are attacked. Second phase, infrastructure is attacked. And third, economy is attacked. And when the economy is attacked, the attack is directly on either large industries or the industrial hubs, or the attack happens on the cyber side, cyber security. These are the ways the war keeps happening. Now that we have already entered a scenario of a war kind of a scenario, there could be much more risks ahead for us. And it's important to be vigilant on those risks. So can we engage a broker to stitch those kind of risks together and about? So these are some of the things we discussed. And then last but not the least, as I just shared with you, some of the industry knowledges. I mean, what I just shared with you is in industry practice, industry knowledge, which is very internal to the insurance industry. Now, you would not have thought about this angle till 5 minutes back, till I told you that what happens in the case of war and how does this impact you and me, and what can we do to avoid this. There are, if you look at the geopolitical scenario, there are a lot of things which are happening. You can't rule out war emerging, help
So your voice is breaking actually. Hello.
assess and just keep on reminding you about.
Hello.
Hello.
Yes, sir.
So I think last part of my voice was audible when I spoke about the war and all that.
Yes, sir. That was audible.
Yeah, so I think I have covered, I did not want to keep it very long. I think we have taken an hour, 55 minutes to touch upon this thing. I would keep the forum open for questions. And I think Deepti ji can help, prioritizing the questions. It may not be possible to unmute all at one go. So maybe questions can be taken one by one.
Sure. So I request all the participants to please, if you want to unmute yourself and ask directly with Rajen sir, so please raise your hand. So I'll give you the unmuting right. Else you can post your queries in the chat box. And of course, the session is very informative and helpful for a lot of professionals who deal day to day with their clients and so many companies outside. So they can better suggest their clients with respect to the insurance, corporate insurance, and what all different things are covered in that. So, sir, there's one question. What level of officers are covered in D&O insurance?
So DNO covers anyone who is an officer. So officer typically means somebody who is responsible for taking decisions, not somebody who is working in operations day in day out for a repetitive work, but somebody who is a decision maker. So it may not be limited to a director. It can also go to the vice presidents and the general managers who work on it.
Okay. Any other questions? Can raise your hand or post in the chat box. There's one more question. Like, I'm a graduate fresher, joined the insurance brokers. How should I start from a BC of insurance? So you please go through this question.
Yeah. So I will just go to my chat. Yeah. So therefore, as a fresher, my suggestion would be the best thing to do is basically you learn most of the things when you are actually into the sales process. But I think the best learning in insurance happens when you start interacting with the claims and the surveyors, because a lot of theoretical things happen, but as you know that the real proof of the pudding, as you say, for insurance is in the claims, and every claim is a different scenario. No two claims are similar, and the kind of learning one can see in the claims is very different. So my suggestion is, if you can spend out of your own initiative, if you can get in touch with one or two surveyors and volunteer to look at certain claims papers, what challenges they come across, it will be really helpful.
Okay, sir, can you please throw some light on Keyman insurance policy?
So Keyman is something that to be honest, I have most of my experience into the general insurance and not on the life insurance. I touched upon the subject, but I can connect you with the right person, because I don't like to speak on things which I'm not good at. But Keyman is something that which covers the life of a person who's at a senior level, who is a decision maker in the company. For example, let me explain it to you in a very simple way. So there is a company who is making an annual profit of 5 crores, and this profit is happening one or two directors or one or two people in the company who are actually getting this business. If something happens to those people, the entire revenue of the company of that 5 crore profit may not be there. So in this case, there can be a life insurance cover for those people, where the company can sponsor that life insurance cover, and therefore that coverage can be taken. So if you have, for any basis this information, if there are further more queries, we can connect you to the right person.
Okay. Sir, still the screen is shared, or you have stopped sharing the screen?
I've stopped sharing. Is it visible?
Yes, the black screen is still there.
No, I think I've stopped
Stop
sharing.
sharing the screen.
The screen is not required to be shared now, I think, because I have my presentation is over. But am I visible?
Um,
Am I?
The screen is still shared from your side.
Okay, let me see. Okay. It's.
Multiple participants.
Is it gone?
No, yet it's there.
I have stopped sharing now, but I think. So am I not? I'm not visible at all. My face.
So your face is visible.
Okay. Okay. So do I need to do anything now?
Let it be.
Okay, fine. Yeah. So any more questions, please? There is a question that unique kind of cover for the crime committed by employee resulting financial loss. Yes. That's what you read.
So,
Yeah.
is with respect to the cyber crime, you can speak on a little bit more on that. If you can share some thoughts or real experiences or some case studies which you have gone through.
Like what? In which side you said?
Cyber crime, sir.
Okay.
Indemnity against cyber crime.
So cyber crime, for example, we came across a case. In fact, two cases I've come across. One in my own company before this. It was a small company then. It was promoted by me and a couple of people, and we came across a cyber extortion where everything got logged and it was asking for a ransom amount. So, being a small company, we were lucky. We could have a backup. In fact, we were one of the things that we had moved to a cloud-based solution sometime before that, and thereby everything that we had was stored in the cloud. So we just had to pick up the previous version, and things got sorted because we formatted and everything. This was a small case. Okay. However, we came across a large case with one of the very large prestigious clients that we were handling. Uh, so, what happens in a cyber case when a cyber attack happens? The first thing is how to get back to normal, and you also have to engage into cyber specialists who will do forensic audit for that. So for forensic audit, you have to deploy a lot of large companies like KPMGs of the world. They come and conduct forensic audits. These audits tend to be very expensive. So if I'm a small company, I can afford to format my screens and recreate the data, no problem. But if I have to look at a large company where those things are not possible, so one, I have to pay the ransomware. This ransomware gets paid. Then next comes the forensic audit, and also what are the loss measures. So future, how do you improve your risk overall? So these are some of the advices for which you have to pay money. So a lot of such things get covered under the first part of the policy. So cyber policy covers for first party losses and the third party losses. First party is very simple to understand, like what has happened to me, ransomware, and directly or some sort of misrepresentation where I have to pay money to on extortion. These are the things, or maybe impersonation by a director. These are the things which get covered. But the case I'm talking about was a 4 crore kind of a claim which came in under that cyber policy. It's not fair to disclose the name of those clients,
Right.
but uh, but these become very complex if they happen.
Okay.
So important that we take a cover beforehand. Uh, Even if it's a nominal cover, it's always better to have. A lot of clients find it very easy to sell their products if they are adequately covered, because the buyers also perceive you as a professional, a risk aware company. So I think with this, uh, uh, a broad idea is I've given on the cyber.
Right.
But it involves a lot of legal and forensic kind of work once a cyber thing happens.
Okay.
And all that is paid for.
So now, as in Mumbai, lots of projects are ongoing, like metro and uh, metro project, and so many other projects are also highways, roadways. So, what kind of what kind of insurance in
As
this
I
kind of
explained to
projects
you,
or ongoing projects,
yeah,
which all the as we have the participants, most of them are chartered accountants or they are professionally in a consultancy. So how they can suggest their clients in a better?
Yeah, so I think project is one of the very large segments opened by the government of India. In fact, it is envisaged that by in next 5 years, the infrastructure, the kind of thrust will continue, or even beyond that. We spoke about fire policy and the contractor all risk policy and erection all risk policy. So for civil works which involve bridges, roads, trains, whatever, all these things, they come under civil work and they can be covered by contractor all risk policy. Uh, there are two ways it works. One is it can have multiple layers of contracts. So there can be a large contract which can be given as a subcontract by the primary contractor. Government is the principal which allows bidding for a project. It can also break down the project into multiple packages. Each package may have a primary contractor, then they may subcontract to another five contractors, and those subcontractors may also further subcontract those things to various levels. So these programs are very complex depending on the size of the risk we're talking about. Like we recently tried participating into the Borivali Thane tunnel. Borivali Thane tunnel is like 10,000 crores sum insured, very complex risk where the tunnel boring machines are, uh, they're all imported stuff, and very few contractors are into that segment. Quite risky, and such insurances are happened from the reinsurance market. Not even Indian insurance companies can cover that, although they front it, but it's done from the back end reinsurance. So these layers are structured in two ways primarily. In one, where the principal takes the overall insurance, or number two, the principal gives an outline that I want so and so covers, and let all the contractors take care of their own insurances. So depending on what kind of program has been stitched at the initial level, one can find the play, and you can come as an advice to them. But the cover remains the same, which is the contractor all risk policy. In the contractor segment, I missed telling you about one segment which is opening up, which is called surety bond insurance. So surety bond actually is a replacement for a bank guarantee in some way, because till a lot of times for bidding or for even performance of your project, you are supposed to give a bank guarantee to the principal or your client. So of late, because of some of the foreign trends, this has been replaced by a small policy where you have to pay a nominal premium, and that acts as a kind of a bank guarantee. This market has been recently started, and of late, the challenges are some government agencies are accepting it, some are not accepting it. However, uh, this is likely to expand to huge levels. I mean, I was attending a conference some time back this week itself. It is estimated the next 5 years this could be 50,000 crores market, surety bond itself.
Okay.
So for all the contractors, this is a cover which is of very, very good use, because what happens for a bank guarantee, you have to put some collaterals. So it releases a lot of working capital if you take this kind of policy. For details, we can arrange, if there's any interest and anyone who's whose clients is keen, we can arrange a specific presentation or a specific discussion on surety bonds insurance. But very good that you raise this point of contractors and projects. This is actually one of the strength areas for us also. We have been working strongly in this segment.
I just some contracted Nagpur highway, like we have recently, we are the insurance broker for that.
Yeah, a lot of such projects. In fact, we are also insurance broker for one of the coastal projects in Mumbai.
Okay. Yes.
So we work very closely with with contractors, and
Right.
happy to help anyone who is into this domain.
So
Yeah.
even for the benefit of our participants, if you have any query and your client is dealing with some major projects with which is into huge risk is involved, crores of rupees, then up to that level you can contact the Rajen sir. I have shared his number for the convenience of all our participants, so you can directly connect with the sir for any query or you need any guidance for providing the insurance. And sir, anything else you want to share from your side?
I think it has been a great session. I think the kind of group that we are having here is I would say one of the most important stakeholders in the risk management of the clients,
Correct.
because you are actually in some way responsible for the business of the clients. Their business looks up to you, and if you are doing the financial risk management anyway for them, you're advising them on various things that okay, these are the risks, these are things that you should do, you should not do. In a way, you're doing all that. So why not club it with some sort of an advisory, or just an eye on their insurance, on their asset, on their people, on their specialty, and especially the liabilities which come on them. It's always a great idea to at least with your client. I think that itself is good enough. We may all not remember everything, but at least this session will make ensure that you at least can touch upon those subjects, and depending on your interest as it emerges later, we'll be happy to conduct in-depth session on those specific lines.
Right. And friends, again on 10th of June, we are having a very important session on main board IPOs. I have just shared the link with that, and it will be taken by the head, Mr. Vimal Parwal. He had been instrumental in bringing up more than 10 main boards IPOs and doing phenomenal in this area. So don't miss that on 10th of June. So the link I have just shared, and you can even share with your friends and connects. It's absolutely free of cost, because this is the principle which we at GyaanStation and all the organizations follow, that we want to spread and as much knowledge and awareness as we can through this channel and platform for the benefit of our professional brothers and sisters. And sir, this today's session on corporate insurance, sir, I'll tell you very frankly that this is a very unique topic, and professionals really hesitate to come up and share their thoughts on this, because there's a lot of deep studies, real life experiences are required, and a professional like you who is having more than 25 years of experience in insurance and served more than six MNCs. I think you have already been to in and already worked in so many different areas. So thank you for joining and sharing your knowledge with all of us. And definitely, sir, I'll share this presentation with all our participants for the benefit of them. And thank you for joining us. And here we end our today's session. Thank you so much. And